Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So recently I have started looking at the S&P 500 and trying to kind of show you some of the Sharia compliant in each sector of the S&P 500. This is exactly what I did when I first started investing, and I've been doing them since. One of the things that I really like about what this basically does is it gives you the 5 or 10 really good companies on the top 10 of that the sector, and then you go away and do your own research. So for example, recently we've actually looked at different sectors. So we've done one for information technology. So we looked at the 5 companies within the S&P 500 within the information technology that are Sharia compliant, and we talked about that. Now what that does for you is you go away and do the research. You don't need to own all 5 companies. That's really important, but you might own 2 or 3 within that sector. Then you look at the industry and say, okay, how many companies are there in that are Sharia compliant, that are undervalued at the moment, that are basically that match my thesis, that what I'm looking for in terms of returns, in terms of growth, dividends, whatever you're looking for. Okay, and then you do exactly the same thing within the entire sector. The reason within the entire S&P 500, the reason I like to do this is because it is very difficult for us to just invest in Sharia compliant ETFs. Now the ETFs are great, okay, but they have a couple of issues. For example, I'll give you a just quick comparison between 2 ETFs in a second. But before we do that, as always, join us on the Patreon account, where you get access to the Discord, you get access to all the buys and sells that I'm making, you get access to the family portfolio, the dividend trackers, the stock watch lists, the ETFs and so on. And this definitely helps the channel. It will cost you about 15p per day. Try it for 1 month, see what you basically get out of it, inshallah. I promise you get a lot out of it, inshallah. And if you don't, then khalas, just close your account and leave it, inshallah. Anyway, that's what I wanted to share with you guys. So let's go now and have a look at what I was saying about ETFs. Now this is an ETF. This is definitely, by the way, not Sharia compliant. So please don't take my word. Don't take basically and this for us as Sharia compliant, because I'm talking about it. It's not. But look at the difference. Okay, this SCHD, okay, has some great companies in it. Of course, some of them are not Sharia compliant. So the Home Depot, the Cisco's, and all of these companies. Okay, some of them are not Sharia compliant. But imagine if this was just basically an ETF full of Sharia compliant companies, and it is very well basically distributed when it comes to the percentage. So this is the weightings, if you like. Okay. Now watch this. In terms of dividend yield, is over 3%, which is really good. That's very, very attractive. If this was Sharia compliant ETF and that was the dividend that I'm receiving, I promise you at least 40-50% of my portfolio, if not 40, but maybe 25% of it will be on this ETF. But this is what I love about this. Okay, look at this expense ratio, 0.060. That is really cheap in comparison to, so for example, this is the basically the World Islamic ETF. It has some great holdings, don't get me wrong. Okay, you've got Microsoft and so and so, but look at the weighting, 19%. Tesla is about 4%. Look at the difference between these two. Maybe they need to rebalance it very soon, whatever the case might be, but that seems very expensive. Very highly concentrated on just one. Okay, now the other issue I have with these ETFs is this part here, 0.3. Okay, 0.3. It used to be 0.5. It has come down, and I keep saying this, inshallah, in the next 5 to 10 years, hopefully this will come down. Okay, and in terms of yield, we're looking at about 0.42. So it's not bad. Okay, but however, that one has a better expense ratio, so it's slightly cheaper. In terms of the weightings is better, and also has a way better dividend yield, which is really attractive to me, because that's the kind of yield that I'm looking for in the long run. Not right now. By the time I finish with my portfolio and doing whatever, that's what I'm looking for. So if I could find any ETF that actually allows me to do this, it will be absolutely amazing. So that's the reason why I'm basically trying to say to people that build your own ETF, and that's what I'm trying to do. Now I've got 27 different companies. My target used to be about 30 to 35, 25 25 to 35 basically. So I will see what happens. Right now I'm on 27. I might get rid of some few companies, but let's see how the stock market goes overall. But I'm gonna keep buying, inshallah, keep building my own ETFs. But this is exactly what I did when I first started. So what I would like to do today is share with you guys four companies in the financials. Financials are full of banks and companies that are not Sharia compliant, but these four companies are. And again, I'll explain each one of the companies what they do very briefly, and then I'll show you the financials, inshallah. Let's get started. And the first company we're looking at is one I own in my portfolio, and that's S&P Global. This is basically a global credit rating company out there, and they don't deal anything to do with the day and day are like of the how banks are run, whatever. They actually credit rating, so debt rating and all of these things. Okay, 140 billion right now. It has a wide economic moat, $446 per share, dividend yield just below 1%, payout ratio only 27%, which means that they can increase this dividend in the next whatever years to come. Okay, recently they've done about 1%. Normally they used to do way more than that, but this year I think financials are not being great, so they have actually just done 1%, but 12% in the last 5 years, which is quite nice. That they have increased this dividend for 50 years, which means they are a dividend king. The annual payout right now is $3.64, safety 99%. The 5-year revenue compound annual growth rate is about 15%, which is quite nice. The 5-year EPS as well is the 9%, and profit margin about 22%. Return on equity about 8%, return on invested capital 9%, almost $4 billion of free cash flow right now. Total return in the last 10 years, we're looking at about 19%. Growth estimate next year, 13%. Growth estimate after that for every single year for the next 5 years, we're looking at about 14%. And it's really fairly valued right now, which is interesting. According to Morningstar, $430 per share is where they think it's about $15, $16 away from that basically target right now. So which is quite nice. So hopefully if we see a drop in the market in the next few weeks, this might become undervalued again. And like I said to you guys before, this is one of the great companies that I really like. Just to quickly show you in terms of the expectations for this company moving forward, is double digits every single year moving forward, about 8% when it comes to the revenue side of it, which is quite nice. Right, so the next one that we're looking at, the company, another one that's very, very similar, and that is MSCI. This is the company that they do a lot of things, but one of the things they do is the indices that we normally look at. So like for example, when we were looking at this, okay, this is called MSCI World Islamic. So they're the companies that maintain all of these things. Okay, 338 billion market cap. Moat is right now a wide economic moat, price 481, dividend yield of 1.3, which is not bad at all. Payout ratio 41%. Again, that gives them room to increase. Latest increase was 16%, which is huge. The 5-year is 24%. Dividend streak of the 9 years of increasing it, $6.40 is what you get for every share of this company that you own. Safety 61%. The 5-year in terms of revenue 12%. In terms of EPS about 17%, 44%. They have no in the return on equities right now, negative equity, so that's why it's not there. Return on invested capital about 35%, $1.1 billion free cash flow, 27% when it comes to the total return in the last 10 years. So that's absolutely amazing to see 27% from a company like this. Growth estimate next year 13%, growth estimate after that 13%. Fairly value right now $460 per share is where they think. 481 is where it's at right now. Now looking at moving forward for the company, about 8%, 13% expected to grow about year over year in terms of EPS, and in terms of revenue almost double digits every single year. So nothing to worry about when it comes to this company. The next one is Visa. Visa is one of those companies. I get questions on Visa and MasterCard all the time, and the reason is because everyone thinks they deal with basically the riba side of the non-Sharia compliant. This company is a technology company. They don't deal with the ins and outs of your transactions. They don't care about the banks and whatever. They make sure that they facilitate. They have the technology behind the card that sends the data, that transaction from A to B. That's all they care. That's all they care. These companies have to pay them royalties based on that transaction, but they don't do the whatever is going on within that. Basically, they don't deal with anything like that. So yeah. 525 billion market cap. Wide economic mode, $262 per share right now. Dividend yield, again, very, very low. Payout ratio, 21%, which means they can increase as well. Latest increase was 16%. The 5-year growth rate of 16%. 15 years of increase in it. $2.08 is what you will get. Safety, 99%. 5 years, basically growth in terms of revenue is about 10%. And the 15% when it comes to EPS, profit margin 53%, 45% return on equity, and 35% of return on invested capital. This is absolutely huge, and almost a $20 billion of free cash flow right now. Total return in the last 10 years, 18%. Growth estimate next year, 12%, 13% after that for every single year. Fairly valued as well, $272 per share. Right now it's $262, so it's about $10 higher than where the price should be apparently, which is quite interesting. And when it comes to Visa, we're looking at, in terms of moving forward, almost basically every double digits every single year for the next 3 years. At least if we just look at the next 3 years when it comes to EPS. And the same goes when it comes to revenue side of things. So absolutely nothing to worry about. And finally, MasterCard. Of course, you can't talk about Visa without MasterCard. 410 billion 10 billion market cap right now. Wide economic mode, $41 per share. Again, dividend yield 0.6, so it's not a lot. These companies don't pay a lot of dividends, but they are considered as a growth companies because look at the total returns over the last 10 years. Okay, in terms of payout ratio, we'll only look at 19%. Latest increase was 16%, and again, this is the important part for me, basically the growth. So they're growing it every single year. That's why I own these companies. It's not because of the current yield, it's because of what they could potentially pay me in the next years. And the fact that this is basically, they've been increasing for this long so far, some of them especially 12 years, 50 years, and so on. That's what I'm looking forward to, inshallah. So what you will get is $2.64 for every share of this company that you own. 99% safety. 5-year in terms of revenue side, we're looking at about 11%, 18% off basically for the EPS. 46% in terms of profit margin, 188% return on equity, and 64% return on invested capital. Again, absolutely amazing. These companies are absolutely killing it when it comes to the profitability and how management are basically managing the company, if you like, in terms of their capital and so on. $10 billion, $10.6 billion of free cash flow right now. Total return in the last 10 years, 20%. Growth estimate next year, 16%. 19%, fairly valued. 451. Right now is 441. So again, it's actually cheaper than what they are recommending. So which means these companies are fairly valued. But if we see tiny bit of drop in the market, they will become a basically undervalued stocks, which is really, really good for me anyway, because these two here are actually, I'm down. But Visa and S&P and Global, I'm slightly up. And finally, just to show you MasterCard and double digits every single year in terms of growth side of it, year over year, and 10% with 12% again for every single year moving forward. So absolutely great companies, no issues whatsoever. Again, like I said to you, when it comes to Sharia-Compliant, have a look at it for yourself. This comes from Zoya, absolutely no issues in terms of interest-bearing debt, interest-bearing securities, absolutely wonderful. Almost 100% when it comes to the business side of things as well. So there you have it. That's the 4 companies I wanted to share with you guys. As always, don't take this as a financial advice, and just make sure that you're actually doing your own research and so on. Just to be honest and transparent with you guys, I do own these companies in my portfolio. There you go. MasterCard, I'm down about 5%. When it comes to MSCI, I'm down about 6%. So these two I will be adding to, inshallah, moving forward. Also, Visa is there, and S&P Global. So this one I'm up about £1,000 or 22%. This one almost 22% or over £700. So I do own all 4 of these companies, and I really like them. So, and they're very diversified. So they're not doing all. Visa and MasterCard are very similar, and the other 2 are kind of similar. So yeah. That's what I want to share with you guys. If you have not joined us, the Patreon account, like I said to you guys, you get a lot out of it, and inshallah it helps the channel. Have a wonderful day. Assalamu Alaikum.